Hi dear baffled traders and investors. Today is Thursday, June 5. I'm pleased to greet you online and present a regular market review prepared for InstaForex. Today, Forex traders are alert to some crucial news. The ECB is due to announce its policy decision. The ECB is widely expected to lower the refinancing rate again to 2.15%. Half an hour later, the ECB president will hold a press conference at which he will justify the red-hot policy decision and shed light on further policy moves. As usual on Thursdays, the market will get to know a weekly update on US initial unemployment claims. Let me remind you that the US non-farm payrolls will be released tomorrow, the report of major importance to all instruments with the US dollar. Now let's discuss what we can trade ahead of the NFBs. The first instrument to discuss is gold, which has been extending its steady rally for a few years. As expected, the metal has left the triangle pattern upward. Now it's ready to conquer new peaks. There are two opposite camps advocating either for buying or selling. I belong to neither of them. Sadly, I cannot offer you any trading signals for gold. I cannot discover anything. As for the euro-dollar pair, be ready for a market buzz today. Perhaps the instrument will update its highs at the time of the ECB event. I warned you of high volatility, my friends. Interestingly, the euro-dollar pair is overbought before the ECB meeting. I'm hesitating to predict a further move for the euro-dollar pair. I don't see any trading signals in terms of the stop-hunting strategy. I don't see interesting levels and proper targets. I found an area formed between yesterday's high and today's high of the Asian session. I reckon it will be broken today. Again, I remind you of extreme volatility during the ECB event today. The reason for high volatility could not be the rate cut itself, but the decrease to a different degree than expected. When the market sees the outcome define expectations, traders go nuts. Fundamental analysts commonly determine market sentiment. For example, they say that the euro will weaken because of a rate cut. So traders price in this policy decision. In fact, the decision could be different. Hence, traders rush to exit positions and open new ones. I mean, if the actual rate cut doesn't coincide with their forecast, the time will be right for those trading on the news. They will add to their positions and a trading volume could swell like mad. I know what I'm speaking about. If the forecast and reality coincide, volatility will burst during the press conference. The pound-dollar pair is also strongly overbought. It is trading at its highs before the news. 1.3591 is the high of the last week. The odds are it will be broken. If you bought a swing low here on the 15-minute chart, you will be able to earn. Now it's too late to go long. I don't see any downward targets. I assume some traps for sellers. Again, it's weird that major currency pairs are trading at overbought levels before the non-farm payrolls. This instrument could rush in the opposite direction. The Australian dollar pair is very tense. I spotted the zone worth of note. The instrument is not going to go down. Yesterday I had a stop loss activated. There are two swing highs visible in the 15-minute timeframes. I suggest we could try to open short positions with a stop loss 200 pips up. The AUD-USD pair is not the most technically predictable instrument, but there is a lot of liquidity downwards. I guess it will be able to smash this liquidity and surge later on. If I were a market maker, I would follow this scenario. The USD-CAD pair is trading lower. It is approaching a swing low formed in October. I don't think that somebody is going to buy with a stop loss 2,000 pips down. The greenback's weakness lies behind the ongoing steady slide of the instrument before the Fed's policy meeting. It looks like market makers are to blame for this. The dollar-yen pair is having an upward correction. It would be nice to find some entry points for selling. I don't see any curious targets. I have a bearish outlook for this instrument, but I want to sell at a higher price. That's all for today. See you next.